big takeaway is going to be the OPEC surprise output cut coming in. They've announced a further production cut of about 1.16 million barrels per day, and now that takes it to total volume cut of 3.66 million barrels per day as per reports. The volume cut now equals to about 3.7% of the global demand. And if that be the case, we can clearly say goodbye to inflation going away anytime soon.
I have a very different view, Aisha. Why are you cutting prices? You're cutting prices because demand is slowing down. And demand, if it slows down, it will really have an impact on everything else. I mean, crude is one variable which will get impacted because of low demand. But if the OPEC members have rushed out to cut production, it just tells you that they want to retain market share. Because remember, oil from other producers is also hitting the market, and especially oil from Middle East, which in a sense, especially from Iraq, which was not coming out because of sanctions, and from Iran, I think that oil will also come back. I look at this as more like a market share attempt to gain market share, because on one side, Russia has entered into these side deals. Russian oil is coming to India. More oil will come from the Middle East, and demand in general, which was anticipated to be higher from China, seems to be coming down. So I think this is more like a desperation. This desperation is largely because of demand cut, but not because of demand increase. And eventually, that just tells you that crude is one variable which will have an impact on the demand per se. So I would read this as something which optically is not good news, but realistically it also means that the second half of this year, maybe oil marketing or maybe oil producing nations are telling you that the scenario in terms of demand is going to be dramatically different.
Yeah, absolutely. Now, if you were to just take a look at the factors as to why you are seeing crude prices spiral up, besides, of course, this output cut that has been announced, but there's also rising US stock supply. There is also, the Kurdish region supply risks, which, clearly run high when it comes to crude prices. And here's how you would assess the impact of the rise in crude prices. Remember, India imports close to about 85% of its crude requirements. So every $10 per barrel of an uptick in crude prices, that's going to increase your current account deficit by about almost $14 to $15 million, and that's almost 0.4% of the GDP. So that really is something key that we need to look out for, whether this is a knee-jerk reaction, Aman, or is it something which is going to, form new levels for crude trading?
That is going to be fairly critical, and of course we'll be watching out for how crude oil prices as well trend this week. But speaking of the kind of action that D Street clocked in last week, it was a truncated one, but we did manage to outperform our peers, surging about 2.4%. 17,359 is where we wrapped up for the Nifty, which means that as compared to some of the other peers for the week gone by, we did stand out. For the month of March as well, we did end up with a small gain. FIIs turned net buyers last week, which is fairly positive. And just mapping out the individual sectors, it was banks that was in the leadership position, followed by the metals basket. So high beta clearly played its part. And IT too packed in a punch, whereas power, telecom and oil and gas, those were some of the sectors on the back foot. Nikunj, April is a lot about truncated weeks and lots of holidays, but given the kind of headlines and what we've witnessed in the month gone by, what's in store for April?
Look, you've got 2 holidays. Not that I'm complaining, but to get a view going because of the market, because of 2 holidays would always be very difficult. Now you could ask yourself is that have we taken support at key levels? The answer to that is yes. Yes, we've taken support at key levels. From those key levels, for markets to move higher, the chances of that could be greater. Brokerages have already come out and they've said that, look, India is no longer a sell, it's a buy. The market positioning in terms of what FIs have done in the month of March, I think they've been net buyers. And there seems to be a big move which now is there in some of the heavyweights like Reliance and HDFC Bank. So I would be far more optimistic than pessimistic. I think there is reason to believe that next few days in the run-up to the earnings season, you want to be on the long side rather than on the short side. Exactly 3 months ago, we were, 2 months ago, we were only discussing the impact of Adani Group stocks on the market. And then 1 month ago, we were discussing the impact of global regional banks on the world per se. So both those concerns in a sense have come and gone, and markets have digested them very smartly. So flows are stable. We found support from key technical levels. Valuations are not that stretched. The F&O positioning is light. Nobody is interested in really, taking long bets. There is lack of the lack of interest in participation in the market. These are typical telltale signs which tell you that in the month of April, you should be in for gains, considering the positioning is very, very, I would actually use the word featherlight. For me, the featherlight is the word.
And of course, as truncated as this week is going to be, it's also going to be extremely crucial as well, Nikunj. You've got the RBI policy, you've got the Q4 banking updates, brokerages will start coming out on their notes on what to expect from the IT sector, all important.
My view on RBI on Saturday was different Monday morning because the crude is very different. I don't think the governor also anticipated this kind of an jump in crude prices. I really hope this is temporary and he will not get too fixated with the spike in crude. But frankly, what the general view is that it's going to be 25 and no more. And that in a sense will set the tone for the market in terms of understanding the inflation parameter. They've already gone on record and have said that the worst of inflation is behind. Banks and the liquidity support, I think that also is looking settled. So it's not going to be a far cry to assume that markets or the interest rate cycle in India, maybe one more rate hike and it's nearing its peak. So second half of this year, if things really stabilize, in October, December, you could brace yourself for a cut rather than anything else.
Okay, and let's hear it out from my